Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, June 10th at about 3:45 Eastern, very close to the close. Well, the Consumer Price Index, the CPI as we know it, increased 1% last month, and U.S. consumer prices accelerated in May as gasoline prices hit a record high. The cost of food soared, leading to the largest annual increase in over 40 years. That suggests that the Federal Reserve could continue with its 50 basis point interest rates hike through September to help combat inflation. On the CPI news today, stocks on Wall Street are falling hard, and as I speak, the Dow is down 740 points. And on that note, we will go on to our first chart today. It is, as it always is, a daily chart of the S&P 500 spider, symbol SPY. Now, when I captured this chart today, just before the close, the SPY was trading at $391.26. That's about 19% below its all-time closing high back here on January 3rd at $477.71. Now, the last major high, the SPY rolled over, as we know, and the last major high we want to catch up with here was at $462 in March. So it had moved down, then came back up. We're saying, well, this is the low of this move down. Wrong. This is the low. Nope, wasn't. This is a low. Nope, it wasn't. We didn't know that, though, because it came back up to 462. That was very nice. Certainly just a little bit above that 468 of those prior January, February highs. Then it rolled over and then did what I like to call a dumpster dive, came down here in a downtrend, lower highs, lower lows. It came down actually to on an intraday low on May 20th at $380.54. It made a little consolidation here, actually a very small, as you can see, double bottom, which is positive, can be, and price went back up, and it formed a consolidation here at about 385, 387, shot up, back up over the 20-day moving average, and then into this consolidation from the end of May into the first part of June. And everything looked kind of rosy, and I'm sure a lot of people were calling the bottom here. We talked last week. I did not, because I've seen that story before. I was hesitant and wanted to see what happened, and Thursday and today, Friday, certainly told us maybe more than we wanted to know. At any rate, the SPY rolled over and is now trying to possibly retest these lows at 387, 385. Please keep an eye in the coming week on the 385 level. And you can see that this is below the 200-day moving average, the black line, below the 50-day moving average, the green line, below the 20-day moving average, these major moving averages. Again, price is down for the SPY, headed down pretty dramatically here. So it looks like it wants to retest those lows, 385, 387. If it does take a turn below that or start falling below that level, then we've got to get even more defensive than we were. So if you are looking for trading, trying to find bottoms here in the stock market to trade with stocks and ETFs, please do so with extreme caution. Now, our next chart today is a chart of the Invesco QQQ, symbol QQQ. This is the ETF that follows our NASDAQ 100, a major index in the market, and where all the momentum stocks definitely gather: Apple, Amazon, Netflix, Meta, and all of those guys. Now, today when I captured this chart near the close, the QQQ was trading at $289.29. Now, this is 28%, the all-time closing high back here in November. Look left. Back here in November, it had an all-time closing high for the QQQ at $403. Since then, it started gradually lower in the last quarter of 2021. then, as we know, fell dramatically down to these lows in February and March, ran back up, and we thought, okay, well, that's the bottom. We were wrong. Anybody who you know, I know that nobody is ever going to know what's going to come up next. That is absolutely positively true. So it's just more when you see these kinds of moves like this, you trade what you see, not what you think is going to happen, and keep loose and open and neutral about it so that you can respond positively to protect your capital at all times if the market goes a different direction than you're anticipating. So price came back up here to this high in March. Price came back up over the 200-day moving average, and it's like, that's a good thing. And that was on March 29th at $379.83. And yes, that was good, and it looked good. But then the Qs fell back below the 200-day moving average and then started sliding from there. And we got, as did the SPY, fell below the 20, 50-day, started lower highs, lower lows, and we can draw all these lines if we want, and then came down here, way down, on May 20th to 2021. That was this intraday low here. $280.21 is what I meant. So it came down here to 280.21, so we can call it kind of like the consolidation here, little tiny double bottom formed. It did look positive. Certainly this pattern can look like the possibility of a beginning breakout, but as we talked about last week, we don't know if it's the lows or not. And then we got the CPI numbers, and then Thursday, and especially today when they came out, the market fell, and the Qs, the momentum stocks, which tend to be more volatile than value stocks, fell pretty hard. So now what we have to do, again, we're at 289 today. We've got kind of a line in the sand here, definitely at 280. So if the QQQ falls below this 281, 282, this area right here, then we're going to have to, like I said with the SPY, we're going to have to get ultra careful. And please, if you're trying to find bottoms, it's fine, but please, please, please put a protective stop in place. Our final chart today, and of course utilities and staples were the only two sectors that looked at all positive today, but you need to be careful with everything right now. We're going to look also at a daily chart of the VanEck Gold Miners ETF, the GDX. Now, the GDX has 56 holdings, including Newmont Mining, Barrick Gold, Franco-Nevada Corporation, Agnico Eagle, and Wheaton Precious Metals are some of the top holdings. Now, if you look back here on the chart with me, when I looked at this chart, this daily chart of the GDX, I saw these two lows here, the December low and the January low, and these come in here at $28, $29 for the GDX. Then it rose dramatically, starting in February, rose up really hard as the market was falling a lot of that time, came up here to this high, April high at $41.60, then fell down hard, down to these lows, down to the May lows at the, and down here to the $29 again, or a little above that, which coincides pretty closely, maybe it's a little higher than these two lows that we just looked at in December and January. Then the GDX moved back up again, consolidated kind of with the rest of the market, right under its 200-day moving average. And then in Thursday of this week, yesterday, gapped down, stayed down. Today it gapped down again. And it opened today at $30.63, and then because the gold likes to go up when inflation is going up, it jumped up today and closed near the high of the day, not quite. It closed or very close to the price I'm telling you, $32.53. So in the coming week, if the GDX can stay up here relatively positive, it does have the 200-day moving average acting as some resistance at 33, but if it stays positive and inflation is still all the talk here, and we are going to have a Fed meeting this coming week, if the GDX can stay positive, and even better, if it can climb above the 200-day moving average, again coming in at 33.18, I will buy a small position of the GDX, and my stop's going to be a hard stop. That means it will be placed with my broker at $30.96. Now, if and when the GDX can rise and close this gap right here, so if it can rise up above and close at 34.75, I will add to my position and definitely have a trailing stop. And somewhere up here, if it can move up, it's going to meet up with a 50-day moving average. That could be a little resistance right now. It's at 34.89. As the GDX moves up, if it does, the 50-day will come down. So you'll have that to kind of look at. But if inflation remains the talk of the day for the next couple of weeks, we may see some positive action in the GDX. So you might want to keep an eye on it. Finally, please know that while all this is going on and you need something to do if you're kind of sitting on the sidelines here, please know this is the perfect time to invest in yourself. So take a few minutes to check out my online training programs and see how you can become a better trader. These programs include our flagship training, 7 Steps to Successful Trading. Also valuable right now, learning how to swing trade successfully, how to trade the trend for profits, and that will come in handy when indeed this market starts up again. Plus, for beginners, how to read charts, 3 winning setups, and another very valuable program in the very near future, learn how to bottom fish like a pro. These programs are timeless, they're low priced, and they can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen, or much simpler yet, just click on the orange button below. Please be careful out there. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.